Hi, this is Kerry Artak with Wicked Stocks, bringing you the weekly report on the DIA, IWM, and QQQ. That's the Dow Jones ETF, the Russell 2000 ETF, and the Nasdaq-100 ETF. You know the symbols. This is for the week, by the way, of Monday, November 15th, 2021. All our weekly charts. And the numbers are good for the week ahead. This is more broad brushstroke analysis, big picture stuff, not fine-tuning like on the daily chart. Before I jump into the charts, just want to encourage you to please click like and subscribe if you haven't subscribed to the Wicked Stocks YouTube channel. Doing so will provide you notifications each and every time the videos have been uploaded and ready for your viewing. This one goes out typically Sunday afternoons each and every week. And of course, I'm doing the daily SPY report on a daily basis. And those go out typically by 5 p.m. Central Standard Time, Chicago, each and every trading day for the next trading day. And just to keep you up to date, I am going to be adding 2 new daily video analyses. Like the daily SPY, it'll be the daily IWM, or the daily Russell 2000 ETF, and the daily QQQ. Unless enough votes come in for the DIA, but I don't want to get into a voting frenzy here. It seems to be pretty clear to me, at least from what I'm seeing, that more are wanting. I don't really have room to do 3 more, but 2 more I can. And this is the real purpose I'm bringing this up, it will begin Monday, December 13th. I mentioned the first full week of December, and that's no longer true. It'll be the second full week. I have scheduling conflicts that first full week that will sort of trip me up if I have to do these every day. So Monday, December 13th, we start with the daily IWM and daily QQQ. Let's jump into the charts. We'll start with the DIA, move on to the IWM, and finish with the QQQ. This is sort of the big picture for the Dow or the DIA. This is a longer-term channel structure. That 347 channel bottom was tested about 6 weeks ago, and the market has moved up nicely, and in the process has elicited a secondary buy signal by closing a couple of weeks ago above a mostly horizontal channel structure that also represents sort of a breakout of that congestion at 359.89 this week. That is good support this week. We tested that formation last week. It did hold. Yes, we settled negative on the week. We put out a new high, new all-time high on the week, and then we proceeded to close negative. So there is a case to be made for a possible toppy market right now. The possible failed buy signal would occur if we did close the week clearly back below 359.89. I should throw in that we also would probably want to close below last week's low of 359.58. Just to be clear, closing at 359.80 or 359.70. Yeah, it's below the 359.89 formation, but last week's low was 359.58. That is the low of the move high. And so if we're going to close below 359.89 and consider that a failed, longer-term buy signal, then while we're at it, we might as well insist on a settlement also below the 359.58 low from last week. And if that does occur, I think this market could ease back by the end of December or sooner to 347 even long-term support, which can absorb selling through the first quarter and above which the Dow remains bullish on a quarter-by-quarter basis, anticipating the 393.10 longer-term channel top. And FYI, continued weekly settlements above 359.89 will keep 393.10 in reach, or that rising formation, as we move into the first quarter. I don't expect to see that by the end of the year, but I think 2 to 3 months is realistic. If we do close below 359.89, and of course also below 359.58, the low from last week, then I think we can ease back to 347, as I say, over the next 3 to 5 weeks by the end of the year, where we could bottom out through Q1. And if we close below 347 even at the end of any week, and it's a bit of a moot point this week, I don't see that happening, but if so, say by the end of the year, then the 315.94 long-term formation becomes a 2 to 3 month objective, and quite honestly, that could be realized possibly in as little as 2 to 3 weeks, depending on the event that may occur to to sort of set that off. But closing below 347 even, we have, let's just call it a 2 to 3 month or sooner objective at 315.94, where the DI could bottom out through 2022. On to the IWM, or the Russell 2000 ETF. We did settle a couple of weeks ago above these convergent formations that, for me, represent the top of this congestion, even though those levels are higher even than the high from last March, which was 234.69. I still consider this sort of the breakout area. And as long as we continue placing weekly settlements above this zone on a week-by-week basis, this market remains bullish. Now, I regret having shown these same formations on the daily chart early last week, because there was one day, I believe on Monday or Tuesday, where we did close below them. But it was by a narrow margin, and the market came back nicely over the following several days. And this speaks to the importance of weekly charts in terms of, if you're doing longer term analysis, if you're looking on multi-week moves, multi-month moves, which is what we're looking at here, using the daily chart as a sort of basis for closure, finality. So on a week-by-week basis, yes, it matters what happens in the middle of the week, intro week, but the market can break below these levels, and if it comes barreling back on a Thursday and Friday and closes above them, we're still in the same longer term buy signal, which remains in effect in the IWM above 237.63 to 237.91, anticipating near term 5 to 8 weeks, possibly by the end of the year, that 265.21 full channel extension. That is just a targeting mechanism. I think with a classic congestive pattern that we've had since last March that we broke out of a couple of weeks ago, I think this is a good measurement for the next near to midterm target, say by the end of the year into January. But overall, I do think that this can get up and underway to the upside. We should reach, and I don't know the timing on that. It could be as little as 3 to 5 months, or it could take into later 2022, depending on what happens on the way up, of course. But I think that the 290.74 formation is a realistic long-term objective. This actually looks a little better, this chart, as you put it into more of a normal XY axis. And you can see there's precedent. We came very close to reaching this, to how should I say, clearing the same distance in September of 2020. You can see we rallied almost the same amount by February. And so what is that? That's about 5 months. So are we going to get another one of those? We may well get another one of those. In other words, 3 to 5 months is not entirely out of the realm of possibility, but it could take longer. So the bottom line here is holding above this upper 230 support will keep that channel formation in reach. And I'm just going to say by the end of 2022 or sooner, possibly much sooner. If, however, we do close back below that 237.63 area at the end of this week. Now, you've got some little levels on the way down. You can make an argument, well, we didn't close back below the March high of 234.69, or we didn't close below this simple trend line at 231.72. You can take whichever level you like, but I honestly think that if we close below this week, below that 237.63 level at the end of the week, then I think you should, if you're long, you may consider liquidating. And if you're an aggressive short player in the market, if you're into buying puts and so forth, you may consider that as well, because I do believe that closing below 237.63 at the end of this week will allow that 213.94 longer term channel bottom. It would be a new channel bottom that it is right now. That would be in reach perhaps by the end of the year if we close this week below 237.63. And that 213.94 would be a significant support area on a quarterly basis. If we did test it by the end of December, could contain selling through Q1, and from there we can turn higher. So that's the big picture for the IWM. Finally, the triple Q. The triple Q is similar to the SPY in that it has approached its long-term resistance within 1% and backed off. So there's a contradiction afoot right now between the SPY, the triple Q combination, and the Dow IWM. Which is right? which will win out is really anybody's guess. I would say the likelihood is that the DIA and IWM are early signals that are legitimate and will sort of win the day. And I only say that with a slight degree of confidence because all of these markets are in longer term bull moves. The one exception you might have made is the IWM because of its significant 9 months of consolidation until pushing through most recently. But, they're all in uptrends. You can clearly see that with the Triple Q. The SPY is the same way. I'm doing the daily SPY analysis. And so, the SPY is in the 474 area, right? Yes. And that is the significant overhead resistance for the SPY. For the Triple Q, it's 406.20. This channel top, we rallied it within 1% of a couple weeks ago, and we've backed off a bit. The question is, are we going to fall back to channel support? Presently at 353.27 over the next month or two. The answer for me is I've got a lot going on here in the low to mid 380s. You've got the high from late August, I think that was 382.77, and the low of the recent high from 2 weeks ago is 384.42. So the combination of these two levels, about 1.5 point spread, maybe a little bit more, is your downward pivot point into December. It's also a level, an area that can absorb weekly selling pressures and above which that 406.20 channel top remains in reach this week. And so you've got a decent floor of support, 382.77 to 384.42, and above which 406.20 in reach this week. 406.20 is more meaningful in that it can contain buying on a monthly basis, possibly a quarterly basis, and from there, as I say, we could, by the end of the year, fall back to 353.27. My indication for expecting 353.27 is if we close this week below 382.77. If we do close above 406.20 at the end of this week, I suspect the SPY would also elicit its own longer-term buy signal by closing above that long-term channel top, which you can see in the daily SPY video, and you're probably already well aware of it. And then I would anticipate over the next several months, possibly sooner, that 449.49 longer-term channel top. And I think that's realistic. 5 to 8 weeks is quite possible. By the end of the year, perhaps, if we close above 406.20, 3 to 5 weeks is possible, certainly. But I think because it's rising and moving away from the market, I think you should give it until the end of January, let's say, to be realized. And that could be sooner. That 449.49 rising channel top, well suited to contain quarterly buying pressures, possibly into the middle to later part of next year as we could fall off from there. But don't want to get too ahead of myself on that. I think that kind of covers it. Please click like. Please click subscribe. Subscribing once again to the Wicked Stocks YouTube channel will provide notifications when they're uploaded. And I'm going to be doing the daily SPY report. The subscription on that is growing, and I appreciate that. You have a great day. If you're watching this is a weekly video, so I'm going to tell you to have a great week, and I will talk to you next Sunday with the same report.